Hello everyone, it is Monday, January 28th. This is Liam McMahon. I'm a currency strategist over at globalfxclub.com, and I'm here to talk to you today about pound dollar. So please take a moment to read our risk disclaimer, and then we'll get started. Okay. So, pound dollar, we're going to start with the daily chart. To begin with, we still have a bullish moving average configuration with the 50 trading above the 100, trading above the 200. However, you can see that all three moving averages have started to slope to the downside, and it looks like the 50 is getting ready to try to cross over this 100 probably within the next week or two. Suggesting that this move lower could get some validation from the moving average, from a moving average perspective, sooner rather than later. You can see that we've had this sort of well-treaded range between 162 and 158, with the exception of this sort of breakout period here. We've bounced back and forth between those two levels consistently here from September 21st. We dropped down to test 158 about 2 months later on November 15th, before rallying back up to 163 again. Before again heading lower. This time, however, we've cleared 158. So we're going to treat this range as broken, and the measured move of a range break like this, just take the distance of the range, measure from the breakout. It's going to give us roughly these 153 lows. So that's definitely something we're going to keep an eye on. You can see that RSI not yet oversold, but drifting very close to that territory. So perhaps not a straight line down from here, but we are looking for any sort of consolidation or pullback back to this trend line or this 158 figure for a possible short on pound dollar. One of the few things supporting pound dollar going forward may be the pound crosses, pound Kiwi and pound Aussie. If we get a sustained bout of risk off, those two pairs could really rally fairly extensively, supporting the pound in the near term. But it really seems to be at this point a matter of time before we break down down to this 153 region. If we drop down to the 4-hour chart, you can see any rallies back towards this trend line, this 50-period moving average, and this horizontal level would be viewed as a great opportunity to start establishing shorts, again for a move lower towards 153. On the hourly chart, you can see pound dollar has started playing levels fairly consistently. We traded in between this round, now we're trading in between this range, broke down, looked for it to establish another range between 157.15 and 157.53 or so. Ideally, that range holds for a while and provides an opportunity. If not, ideally for us, we get a rally back towards 158.70 to 19 or so, and start to look to establish shorts in that area. Pound dollar has been weighed down by a bad GDP print, though not as bad as it perhaps could have been, as well as dovish comments from the Bank of England suggesting that more monetary stimulus could be forthcoming should the economy call for it. It doesn't seem like there's much good in store for the pound going forward. So we're definitely going to be keeping an eye on this, looking for consolidations or rallies back towards 158, even up to the 200-day moving average at 159.33 for opportunities to short. Really only a break of this trend line or a break back into and hold within this range postpones the bearish picture. I wouldn't say it negates it. Really only a close back above 160 fully negates it, which would probably lead to a move back up to 163. Really, it would take a pretty sustained rally to save the pound here, and I just don't see that in the cards. So we're looking for consolidations and rallies to short pound dollar for moves down to 153. All right, I hope that was helpful. As always, if you have any questions, come see us at globalfxclub.com. Good luck and have a great trading week.